This time around, it is not the rates or the stance that the markets are going to be watching out for, because that's a near given in the current scenario. Rather, markets are on tenterhooks to see if the governor is going to make any other explosive announcements like raising risk weights or open market bond sales. Now, all of the respondents to CNBC-TV18's poll expect no change in the repo rate this time around. That is a status quo policy for the fifth consecutive time because of the stronger than expected growth numbers and the continuing inflation uncertainty. In fact, the respondents to our poll have ruled out any further rate hikes in this fiscal year. And as for the first rate cut, while 20% are expecting it by the first quarter of next fiscal, a larger majority of almost 70% expects it only in the second half of FY25. No change is expected in the stance, which is going to be retained at withdrawal of accommodation, not even an indication of a possible change in stance just yet, because many believe it will be tough to find a consensus among MPC members to shift to neutral just yet. Now, the inflation forecast for FY24 at 5.4% is widely expected to be left unchanged, with just 10% expecting a slight revision upwards. On the GDP numbers, a large majority is expecting RBI to up the 6.5% forecast for the year to between 6.6 to 6.9% on the back of a stronger than expected show in the second quarter. Now, the governor himself is expected to sound more hawkish than dovish in his statement, because we're not really out of the woods just yet when it comes to inflation, and risks do remain. Now, on liquidity-related measures, some are expecting clarity on the OMO bond sales, which was announced. They will also watch out for any changes in the standing deposit facility mechanism to tighten policy without actually tweaking rates, and some others are looking for more short-term liquidity-related announcements that the governor could make. Now, as for other prudential measures, the general expectation is RBI could tweak prudential norms where it senses excesses like it did for unsecured loans. Perhaps there will be more standardization of risk weights. The governor also earlier warned about usurious lending rates from certain microfinance lenders, and so the markets will watch for any regulatory action on that front. But all of these may not necessarily happen in this policy itself.